As the market has entered a correction phase, the question becomes how do you make money in that? One is by shorting. Sometimes, like if you're an IRA kind of account, you cannot short, so you can use an inverse ETF. But in this video, we'll explore some of the things which you can do. As you know that when the market is in correction, there is a lot more volatility. When market is going up, it tends to be less volatile period. Things move very smoothly. So in this kind of a market environment, you have to pick and choose your some of the setups. One, I would say clearly, is like if you're trying to use an anticipation kind of a setup, especially on bullish side in this market, you will get chewed because uh, a breakout can get like faded immediately if the market weakens. So stay away from anticipation as a setup during this particular time period. Anticipation works very well in a less volatile kind of a move, especially on a bullish side. So you can look for an anticipation on the bearish side because that's where a lot of stocks will have a second down leg. Like a lot of them are having first down leg, then they will have a counter trend move. Some of them will form a bottom, but many of them are going to continue their move. So that's where anticipation on the bearish side is really the thing. But like if you're really looking at making money and good amount of money during the bearish time, as you can see, like as I posted today in the morning, like kind of basically 23.44%, and most of that return has come in during the last 1 week. The reason being that it is basically you have to find during the this kind of a period, find news plays, because news plays will work on both sides, either on a bullish or bearish side, will work much better in a highly volatile environment. So if you can find a news play, and what is a news play? Something which has a earnings or something which has a news, and it is for that particular day, it is going to be working because of that particular news. Snap was an example of yesterday, which like, and it made almost like, and I think, and from the opening print to the final print, it made more than 25 or 24% move. Or today you had like say things like Goose, which was down on earnings, or you had like in a Tesla which was down on earnings. So where there is a immediate news, so there is a news catalyst and there is a high volume also, like Tesla traded 10.3 million volume. So that's the kind of stocks which you have to look at in terms of during this volatile period on a shorter time frame kind of a thing, where stocks which have immediate news are more likely to make a move. Like this is another example of that IRBT, which had earnings, and then like, and it kept on going down. What happens in a bullish market like this kind of an earnings? It will be like there will be deep buyers, and many times it will gap down, and then like that will be the bottom in the first half an hour, and rest of the day it keeps going up. But in a bearish market, once the thing becomes bearish, if there is a news, if something so a stock like this which missed earnings, it will just keep going down. Okay, so look for news plays is basically the biggest tip which I can give you if you're looking for plays during this time. The other thing which you can look for selectively is IPOs. Many times IPOs do work during the bearish time because it's a different market, not like many of those, like say you have like a blue apron which was up today, and I pointed it out when it was up. There was a trade which I took yesterday and which I closed today, where I got stopped out packs, which was like, and yesterday was a breakout. It went all the way up to 29 today. I got stopped out at 28.75 once it started moving. But like, and this was the whole thing. The stock was doing very well yesterday, and it had a follow through actually. Then it faded. So look for things like news plays. Look for something, if you're going to be shorting, also look for something which has the immediate catalyst, like especially the earnings catalyst, and look for IPOs. Now that's like really the key to finding plays on the both bullish and bearish side during correction. The other thing which you have to look for is basically at some stage this selling will be over, like, and the market may not start rallying for many weeks or months probably, but the selling gets over, and once the selling gets over, there's a stabilization phase, or there's a very volatile range bound kind of a play near the low, and then the market starts to recover, but then like, and not everything is going to recover. Some of the stocks are going to be recovering much faster. Like say you have this kind of a sell off like here. It took months for the market to recover. Couple of times when you had this big sell off, it takes a couple of months for it to start and really rallying, but it stabilizes much quickly. Like here, see, there was a correction, but like 2-3 months, but by that time the stocks start showing up. By that time, like if you had seen during this period, some stocks would have shown up. Like similarly here, there were corrections. So that's another thing. The thing which you have to look for next phase, what is going to happen when the stock market starts again, like stabilizing and going up, will be two types of stocks. Okay, most of the people say the stocks which held up well are the one which will be the first to lead. Not necessarily true, and I've done a lot of videos on this previously also. The stocks which are beaten down the most are likely to do the best when the market rallies. Okay, and this you can do study yourself and look at empirically what has happened in the last 10 years. Okay, every time there has been a correction since 2009, the stocks which are beaten down the most did the best. Like if you see during this particular time after like there was a correction, which you can't even see also nowadays because the market was relentlessly going up. After this period, when the market started going up, I've done a video here also like saying which stocks were the stocks which were beaten down the most. The oil and gas stocks were the one which led the move. And if you remember some of the stocks like REN, I think was one of the biggest winner coming out of that. See here. Okay, it's not the stocks which hold up the well are necessarily the biggest winner. That's a misconception, or that's like a thing which like a lot of people claim that is what happens, but you have to, based on what really happens during a particular phase, you can decide yourself. This stock went up 1,000 times or 1,300, 1,400%. And this was not the only stock. All the stocks which are beaten down during that particular period were the one which made a move when the market had this correction last time and started rallying. Not necessarily the stock which held up well. Two types of stocks then. The stock which are beaten down the most, they are the one which will bottom and they'll make big moves. And this you can see yourself, because this I have done like in a video after that correction. I do it most of the time after a correction, after 1 or 2 months, to show people, you look at why certain misconceptions continue to be there in the market, but you have to really keep your eyes and ears open. So yes, some stocks which hold up well also do well, but most of the stocks which are going to make a big move will be the one which are beaten down the most. The stocks which are like really at the bottom of the thing, or the sector which is the worst performing, might do the best. This is what happened during this particular phase, oil and gas. And you can keep looking at previous corrections also. What has been true is that the beaten down stocks are those which are stretched most. So I would look at, say, something like, if you have to find those kind of stocks, I would look at something like which is stocks which are in a half trouble kind of a scan. So stocks which are like basically down 50% plus are more likely to be the one which will like bounce back than the other which are like holding up well. So keep that in mind. It's like always, like I always hear this thing that saying that okay, the stocks which are holding up well are going to do the best. It's not true, based on at least the studies which I have done, and I've done multiple videos on that. So two types of things. One, you want to look at a stock which is down a lot, that you can find in either MDT bearish scan. If you do MDT bearish scan, if you run a MDT bearish scan, all these stocks are stocks which are like basically highly stretched to the downside, and some of them are the one which are going to make the biggest move. That's the nature of market. Okay, this especially with all these program trading and things like that, the stocks which are beaten down most, worst fundamentals, will be the one which will have the biggest move coming out of a bottom. And then after a couple of weeks is when you will see the stocks which held up well will be the one which will do well. Like here, not here, like, and if you see, you'll see that multiple times the same thing happens. Okay, so look for stocks which are stretched a lot. That's one. And second, look for stocks which are held up well also. For that, you can look at MDT. If you look at MDT bullish, on MDT bullish, you will see that we are looking for stocks which are like still holding up well relatively. And because we are using an absolute momentum, as stocks start losing momentum, they will no more meet your condition and they'll drop out of this scan. So as you see, like you have currently 149 stocks, and that's a weekly, but like the stock which hold up the best, some of them will be the one which will do well. But most of the time, at least in the first 4 to 6 weeks, you will find that beaten down stuff will be the one which will do very well. So basically during the correction, look for news plays. That's your number one strategy, either on a bullish side or on a bearish side. If there is a news play like yesterday, this was clearly a news play, right? Snap. And it worked because there's a catalyst and a powerful catalyst for that particular day. It works. Similarly, today, if you look at something like iRobot or even Tesla, it was earnings. So the news was what was important, and that's why they had a follow through. Even Goose, which after earning gap down, and there are a lot more people who are very bullish on Goose. So those are the news plays which will always be there. The other thing is look for IPOs. Don't really do anticipation in this market. Even breakouts are going to be difficult, at least in the near future. Once the market stabilizes, it starts like becoming more range bound, they will work. So, and you have to look at a shorter time frame of holding also, because if you're looking for something in this market, something which is likely to work is going to be short term kind of a thing. So those are the things which you can look for in this very highly volatile kind of moves. Many times like you will find that intraday volatility is very high. The market will be up 200 points and then it will be down 400 points, and in the middle of the afternoon some news will come in, or some Fed guy will make some statement, and suddenly the market will, like, before you can blink, the market can go up 400 points, because it's all like program driven, more volatile kind of a thing which happens when the market isn't down more. So look for those kind of a thing when you're looking for plays, news plays, IPOs. Don't go anticipation crazy, and look for basically something where there is a very strong volume also. Like, and if you do something which is low volume stuff during this time, it's not going to work. You need something which is heavily liquid. So these are some of the pointers which you can use to make money during market corrections. If you don't want to be just sitting on the sideline, because some of us who are full-time traders, we still need to like make a living, we still need to pay rent, we still need to make money for buying $30 year old whiskey. So then in that case, what you have to do is you have to look for news play, you have to look for very liquid stock, you have to look for IPOs, you have to look for beaten down stocks, and combination of that can still help you find moves in this market.